What if I told you that there's this one company that control 100% most advanced chip manufacturing machine in the world? Yes, in this video, I'll be talking about ASML. If this is the first time you watch this video and you have yet to follow our channel, please remember to click subscribe. And if you like this video, please click the like button. So let's dive into the company. ASML share price have shoot to the moon. So shall I sell or shall I buy more? Let's dive into it. Okay, so first off, let's look at the top line. In quarter 4 itself, they broke their highest record again. It's close to 10 billion revenue per quarter, and then it's growing at more than 20%, and a full year is at 32 billion, and it's like another record-breaking year. We're standing at 52% gross margin and close to 30% net profit margins. All these margin numbers expands while revenue is growing. It shows clearly that the company has a pricing power. It's a hallmark of a monopoly company. So let's look into the different segment of their revenue. There's this memory segment, logic segment, and install-based management. So their machines mainly support the logic, which is the GPU or that supply to NVIDIA, and also memory segments that supply to all those memory chip makers. For example, Microns, for example, SK Hynix. So these are the companies that buy their machines, and all the companies that buy the machines would need to have ASML to service their machines. So install-based management is just like a servicing fee. So you can see that yes, their machines have been selling over the years, and don't forget all the machines need servicing. So you can see the servicing numbers has been growing. It shows as an install-based management, which is the yellow color portion in it. And you also can see that in this particular deck itself, I'd like to highlight that you can see quarter 2 or quarter 3 25 and quarter 4 25. You can see that actually the memory portion of their so-called net booking has increased more than logic, because all the GPU, the AI processing, will need the high bandwidth memory to support the AI process. So memory has been growing for the last quarter itself. So if you follow companies like SanDisk, if you follow companies like Pure Storage, you will see that those companies actually is enjoying their highest high in their history. Likewise, you can look at the backlog. So FY 2024 and FY 2025, you can see that yes, majority is still logic, but you can see the memory portion has been growing. There's a lot of highlights in terms of numbers, but let's look at the exception item, because as investors, we have followed through this ASML for over the years. I've been an investor, but one of the things that I like to really look at is really, is there any exceptional items that would affect or maybe would change the business that in the end that will affect my portfolio? So there's this 8 exceptional item. Maybe you share in the comment which of these 8 items do you think will have the biggest impact on ASML future. Let's see if you agree at the end. So first off, the first exceptional item. So ASML R&D and SG&A expense have like really exceeded what they have expected. So you can see that there's this 400 million OPEX overrun versus the guidance, and their R&D expense is, or so-called investment, I should not be expense, R&D investments is sitting at 4.7 billion, which is roughly close to 15% of their revenue. I would say it's quite a higher end. So some of the companies, you can see that their R&D is roughly 10%, but for ASML, they are sitting at 15% of their revenue. Why? Because they have invested heavily in the high NA EUV, which is the next generation lithography technology, and this is the one that powered or enabled 2nm and beyond chips. So what they have explained is they are accelerating their development timelines to meet their customer demand. So what do you think about this? Is this a waste or is this a strategic investment? What I'm seeing right here is like a lot of time when company underspend in terms of like R&D, they will get disrupted. So I think ASML is putting more resources, putting more effort in growing their moat in this sense lah. Let's look at the exceptional item number 2. The company is growing well, revenue is growing, but doing like workforce reductions of 1,700 headcount is about like close to 5% of their global workforce. Does it make sense when the company is growing? So now, before you thought that the company is like having some like warning sign, let's add some context in this change or in this strategic rationale of this movement, right? So what they are doing is they are just like restructuring the company to focus more on R&D. and key manufacturing priorities. And where is the reductions happen? The reductions happen administrative and non-customer facing role. Put in more resources into hiring R&Ds. So this is just a prioritization of their strategic play. But the question is this: can ASML maintain their innovations velocity with few people? These are the things that are risks that we should watch out. The third exceptional item, they have announced a new share buyback program extending from 2026 to 2028 of 12 billion euro. So what do you think? What does it sound like for you? Like they announce more share buyback. I think this shows management confidence, whereby they have enough cash flow, not to just invest in R&D. They can also pay dividend, and right now also announcing buyback of like 12 billion in stocks. This is a good news for investor. I would say it is, because when their revenue is growing and their earnings follow, and with share buyback, when your share count reduce, your earnings per share will increase at the end of the day. So this is how they can create more shareholder value. So let's get to exceptional item number 4. Just now is share buyback. Right now we are looking at dividend payout. So you can see that for the last 5 years, their dividend payout has been increasing at a 17% CAGR from so-called 2020 to 2025. In 2020, dividend per share is 3.2, and right now is sitting at 7.5. Throughout the past 6 years, their dividends have doubled. So this is very good news for investors, especially those who invested early like 2020. Your yield has been doubled based on your cost. And of course, if you look at the dividend increase, right, you will see that actually, because the company is still growing and their dividend is growing, they are being seen as dividend aristocrat. So this is a new term that I learned as well. They are not just a dividend paying company, not just a cash cow company. They are a dividend aristocrat. What is dividend aristocrat? It just means that the company is growing and their dividend is growing as well. Next, exception number 5. This is the things that I will really look into deeply, because ASML have shipped their first high NA EUV machines and recognized their initial revenue in Q4 2025. Why is this a big deal? Because the high NA EUV machines cost close to 350 million. One machine, 350 million euros, so close to 400 each kind of US dollar revenue for one machine. So what they are looking right here is like high-NA EUV machine is essential for the 2 nanometer and beyond machine. So they expect this as a significant revenue driver starting in 2026. Right, so let's imagine if they could sell 10 of this machine, it's close to 4 billion. So this is a game changer in the business, especially those who are pursuing 2 nm and beyond manufacturing machines. Next, these are the things that we might need to take note. Why it might be a worrying sign, because their proportion of revenue from China, which is standing at 29%, is looking to reduce to 20%. Means the proportion of revenue from geography from China is reducing. And is this an alarming sign? Yes and no. I think this is resulted from the export restriction by the US, but they are still selling the older or matured machine to China, which is a DUV machine, which is to use to manufacture chips that is like 28 nanometer and above. So this is the long-term risk that I think it will remain, especially looking at the fight between China and US in terms of like the AI leadership. Can ASML offset this like drop of revenue from China to other places? So what we are seeing right now is yes, because they can get more from Europe, Taiwan. So this is a sign whereby the China is reducing, but it's not so worrying in a sense. Next, let's look at exceptional item number 7. When I invest in ASML, I didn't put much emphasis on the memory portion, because I thought, wow, AI is growing, we need a lot of GPUs, need a lot of NVIDIA will definitely need a lot of this machine. That's why TSMC need to buy all this machine. The logic segment would be so-called taking the bulk of the revenue. But I'm wrong, because with all GPUs, you still need CPUs. With CPUs, and you need the high bandwidth memories capabilities. So that's why they're also serving this market, right? So it's a blessing in disguise. While so-called all these like chip makers like NVIDIA, AMDs are having a hit in the market, the memory portion is growing. Yeah, I may not be the best analyst in the market, but if this is a good company, I'll benefit from this good company. But right now I learned about it, and then I felt that I'm really lucky to invest in ASML, looking at the need of the memory segment is growing significant as well. This is what the CEO said. We also see the progress we continue to make on our cost of technology with EUV is driving for more little intensity, and it confirmed in the last few months. So this is on in terms of like high band with memory. So if AI demands continue to increase, memory capex will grow. Like, so what they see is like 30 to 40% in 2026, and ASML definitely able to capture this huge spending. So next, they have already announced that they invested in this company called Mistral AI. This is a very strategic investment because it's not just like ASML moving to downstream, which is the lower end, which is the AI companies, not the chip making company. So these vertical integrations can allow them to sell to these so-called AI companies in the sense that it helps AI companies that in the end will drive the chip demand as well. Another thing is Mistral AI is a European company, so they like to strengthen this European technology stack in their home ground. I think it's a strategic reason they invest in Mistral AI. So ASML can position as an infrastructure backbone for European AI sovereignty. I guess it's a very strategic reason. So let's look in at the ASML, how have they progressed for the past 10 years. If you look at past 10 years, their CAGR have grown at 18%, and the revenue have close to 4 times, net income close to 6 times, gross margin and net margins improve close to like 6 and 7%. So this is a very, very good sign of a company which is not just growing, also growing their monopoly power in that sense. And some of the questions that being highlighted in the last investor Q&A is, the AI demand surge sustainable or just short-term spike? Because this is also what a lot of investors are worrying about. Is this sustainable? So what the management response is, we see a very positive dynamic and then believe the AI demand is real, and they are very positive that this is a very positive sign on medium-term perspective. And if you look at their capacity expansions, how will ASML scale to meet EUV demand? So some of the concern is like, are they being kept by their capacity? So what they say is they expect their EUV business to increase significantly and the revenue to significantly go up in comparison to 2025. So they say they're able to meet the demand. Right. In summary, ASML, they are monopoly in the high-end chip. Their margin is expanding, and then they are riding on the AI super cycle. But what to take note is really the geopolitical risk, which is like the China portion, and of course their valuation premium. The valuations is very different 6 months before and right now. And of course, cyclicality of this industry. As you know, the semiconductor industry, there's a cycle overexpand, overshrink, overexpand, overshrink. So there's a cyclical things happening in semiconductor industry. But let's look at their valuation premium. So if you look at their share price, right now it's like close to all-time high, and their value so-called price to sales ratios is sitting at close to 15, and their 3-year average is around 11 times. So you can see that there's a shoot up in their valuations. So if you look at their past 5 years kind of valuations, it's close to their peak. So if you intend to invest, please also to make sure that you're aware about these valuations that is sitting very high right now. All in all, for a 2026 so-called outlook, they are still looking at double-digit growth. Their gross margin is sitting at 50-ish%, and then not to forget, their China revenue will be looking at around 20%. Just to wrap up, ASML is a monopoly with no competition in EUV lithography machines. And then second, the AI demand is like structural. And although OpenAI have reduced their total investment from 1.4 trillion to 600 billion, but it's still a very significant amount. And lastly, the Mistral AI investment is a very strategic investment that they make and to integrate vertically into the AI value chain. I hope you like this analysis. If you like this analysis, please click like, and then do share me your comment on what's your thought. Is this buy or sell for ASML? And if you have yet to follow, please follow our Telegram group and also subscribe to our YouTube channel. So that's all for this video. I'll see you in the next